Hey traders, welcome back to another Sunday video where we go over the markets for the week ahead. Hope you're doing well and hope you traded decently during all of this craziness last week. You can see big news was the dollar last week, which continued to scream higher. And we're going to talk a little bit about that, my thoughts going into this week, whether or not I'm still bullish on it, whether or not I think that this thing has more room to squeeze higher, or et cetera, et cetera. The first thing I'll say is that I was fortunate enough to actually catch some of the move here. But if you guys have been watching the channel, then you know, then I got a little bit played here. So I went long UJ. USDJPY, made some money on the way up and ended up getting stopped out here on this pullback. So I still made money and I can't complain, but some part of me, of course, is feeling a little bit like I missed the move here after price continued to scream higher shortly after. However, there's no point in dwelling on a loss too long. The point is to move on and look for setups. And when looking at the dollar, this thing is pretty ripe for setups. I think that the USD has some more room to go, but might be due for a bit of a pullback before then. So I'm looking at the USD or the DXY here, the dollar index, and what I'm paying attention to is this zone here. You can see looking left, we had a key breakout point here this past week. Price tried once and then failed, sort of pulled back into this zone and then was able to explode higher there, pushing us through the highs. So any pullback to this zone here is a clear area of support in my view. So 104.6, I've got my eye on this week. If we do get a bit of a sell-off on the USD, I'll be looking for possible longs. And in this video, what we'll do is we'll step through and I'll talk about all the different assets that I'm interested in trading specifically against the US dollar. And first thing I want to show you there is that if you were just looking at the watch list on the Edge Finder, which is our market scanning tool, you can see we get lots of USD showing up. We've got Euro dollar, Aussie dollar, pound dollar, so on and so forth. And that's exactly what we're going to go over here together in this video. So here's something I wanted to bring to your attention as we get started, especially as we talk about the US dollar. You can see that of all the assets on the COT data that we pull in with the Edge Finder, you can see that the dollar has almost a 70% ratio of institutional money on the long side, whereas only 30% of institutional money is piled into the short side. This is a simple indicator that we use just to get an idea of what big money is buying and selling. And so if you want to pause the video and look at any of your favorite assets, you've got the Canadian dollar, the pound, US 30, gold, etc. Feel free to do so now. But again, when focusing on the dollar here, you can see that overall there's a lot of institutional money on the long side of this thing. So that especially is another reason why, if it does decide to pull back, why I will be looking to get long myself. Now, some setups that I like personally are two main ones that I've been talking about over and over, which is, of course, we've got to go back to that dollar yen and talk a little bit about this move that, of course, I missed the prime rally on. However, I still have that chance to potentially catch it if it does decide to pull back this week. So I'll show you what I'm talking about there. If I draw this fib from swing low to swing high, there's nothing magical about fibs, but I like to use them just as sort of a extra influencer on my trade or indicator to find pullback opportunities. And really what catches my eye here is this 50% to 61.8% retracement. And again, this lines up beautifully with this past level of support. And again, nothing magical, just simple support and resistance in combination with what we look at in the Edge Finder. So if price does pull back down into the 50 or the 61.8% this week, this for sure is a buy for me. That is almost 100% chance I will take that trade if it does sort of set up going into this week. And probably, depending on the time frame that I actually execute the trade on, stop loss ideas could be below here. So if price, comes down to this area, if I'm swing trading it more likely, I'll widen that stop loss to account for this potential low here. So basically, if price shoots through that low, that will be my signal to get out of the trade. But if I find something on the lower time frame that I like better once the week sort of starts to form, if this thing spikes down and makes a move in here, I might be able to tighten up the stop loss a little bit and increase my risk to reward. So I'll be paying attention to that. And if you watch the live streams, I'm sure you may catch me talking about that if, of course, this setup occurs. Now, if it doesn't, if it just screams higher, then there's nothing for me to do on this pair, and I'll just wait longer and look for other setups. Speaking of other setups, we've also got to talk about the euro. And The euro, you can see my chart already created here because I have this one on my watch list. We hit a bottom here at 105.36, and price found a little bit of a bounce. If price is able to get a bit of a rally going here, this 50% retracement has my eye for possible sell setups, right? Again, selling that euro, favoring the dollar. And if we go look at the individual page on the euro USD data that we have, we get a strong sell overall. And I wanted to show you some stuff specifically regarding seasonality, and this might be interesting to you. So I was pulling up the euro. Check this out. Seasonality is just the study of month-to-month performance over the last 10 years or the last 5 years. On the Edge Finder, we just track this so that you can see this data. And if you take a look, historically speaking, February and March, right, are historically negative months in the Euro USD in the last 10 years. Now, that's not magical information, but in combination with the rest of what we are looking at and the chart looking really good, this is giving me extra confirmation going into the month of March, which is historically a declining month, to look for sells on the euro. So I'm interested on the sell side. I'll see if I can find something. And yeah, by the way, you guys, we do now actually have a free version of the Edge Finder. If you don't have access to the free version of the Edge Finder already, there's a link down below in the description to go to the Edge Finder page on our website. If you just hit that page, there's a free version available for you to grab access to. And again, that hopefully will be helpful to you if you don't already have it. So grab it. You can get access to some of our data for free. So yeah, just a little reminder there in case you don't already have it. In terms of price forecast, the Euro USD looks so bearish, right? We've just got a projection to the downside there based on momentum. And again, you can see that on the chart, just a downward trend going on this one. And I'm looking for that chance to join it, but I just don't want to do anything down here, right? I need that pullback prior to entry just to increase that risk to reward. And to know that I'm getting, I'm not just, chasing, if you will. So that's another one that's on my watch list. XAUUSD, here's a gold chart for you. Gold to the downside as well. This one actually just recently has gotten to a point where I'm interested in potentially selling this thing similar to euro on a pullback. So if this thing gets a pullback this week, and again, we can draw our fibs, just looking generally speaking for this area to come into play, right? That 50% retracement, if it does shoot up into that zone this week, if we get a bit of relief on the dollar, then I'm looking to go short. And this one's kind of new to the watch list. In fact, I need to double check that it's still on there, but gold was printing as a sell, and yep, you can see it. There it is as a possible sell on the Edge Finder here. I'll pull up gold's specific view, and here's what we've got. So, if we're taking a look at this, seasonality does not go in our favor. You can see down here that March and February are historically positive months for gold, but we have to take into account the full picture. And economic numbers are really where we start to point bearish on the gold market. Inflation, unemployment, interest rates, and money supply tend towards a bearish reading for gold. And when we look at the chart, like I said, you can see just from technical price action, we've got lower highs, lower lows. And so a rally this week could offer some premium selling opportunity, in my personal opinion, off of the 4-hour chart. Let's take a quick look at the indices. The S&P 500 selling off pretty hard this past week. And in my view, I've been bullish on the S&P, and I caught some good moves on the way up. But recently, this sort of this daily chart upward trend fell apart. And for me personally, I'm not glorifying, overly glorifying trend lines or anything like that, but just the simple concept here of higher lows, higher highs fell apart here, and it has really since continued to the downside. So I'm personally pausing on any sort of bullishness on the S&P, the NASDAQ, etc., and really just focusing my attention on the dollar at this time, as the dollar pushing higher like this has really cracked the S&P. It seems like there's that correlation there, or that inverse correlation rather, where the dollar goes up, the S&P down, dollar goes down, S&P up. We've sort of seen that come back into play as this dollar rally has put a lot of pressure on the indices. So I'm paused on bullish on the indices. If anything, I'd be almost short biased, but probably not something I'm going to pull the trigger on, as I'd rather just be long dollar. Dollar Swiss was another one I wanted to discuss with you guys here. USDCHF had a big rally past week. You can see breaking clean through this high. What was resistance became now support, and we can similarly analyze this one like the dollar yen, right, where you had this big explosive trend to the upside. Look at that, a beautiful regimented buying pressure there on the dollar, and now we've got this beautiful 50% retracement that I'm interested in as well. So a lot of dollar setups this week, guys, and the past week or two, or I'm sorry, like 2 or 3 weeks, we've been really dollar bullish, but now even more so than ever. I mean, lots of data came out, hotter than expected. CPI, retail sales, PPI numbers, lots of numbers coming out that really push that dollar to push through the highs. And I think that momentum has potential to continue. And so that'll be what I'm looking for going into this week. We'll see if I'm right about that, of course, but I do like dollar Swiss as well to the long side on a pullback. Let's see, what else can we find off the watch list? So if I just filter, I'm going to take out the neutrals here for a second and see if we can find anything else. So NZDUSD might be another one to look at. So this one has a sell bias on the edge finder. And if we just mark this one up, you can see it's similar story, right? Key levels of support being broken this past week. A really big week for the dollar bulls. Breaking through, right? That NZDUSD breaking through, and this candle really signed the deal, if you will, to the downside. So a rally on this one, to me, would be met with possible sell interest as we retest 62.10 on NZDUSD. And again, in terms of targets, where do we think this thing could go? The problem here is that, the daily chart has kind of cracked. And this like higher time frame level of support, right? What we're looking at right now, that was a key thing that occurred this past week. And if anything, it's kind of tough to call where the end of this downward trend could go. We're tagging longer term. A 50% retracement is usually where we say price could very reasonably go in a new trend, right? So this is a longer term push. And then now, even if this thing longer term goes up again, I think you have room to go test the 50% retracement, especially with all the dollar bullishness sort of resurfacing. So, and again, yeah, that 1 hour chart looks really clean, nice breakout, just solid red candles, one after the next, pushing this thing down. So a rally, especially sort of a teetering rally back up into this area, would be very interesting on the short side. And part of the reason we're getting such a strong reading on these things is the economic numbers. So for example, if we pull up a very popular chart, we take a look at the pound against the US dollar. Right, so we've got the pound pulled up. Pound's getting a -10. In the economic numbers section, GDP, inflation, unemployment, and interest rates all favor the US dollar. And, when I say favor, what I mean is, okay, well, GDP numbers are healthier in the US. Inflation numbers are healthier in the US. Unemployment is lower, hence healthier in the US. And interest rates are more attractive to the currency, to the US dollar. So you impact all these things, you tie them all up nicely into, a single basket. And it says, well, when you pull up pound USD and you see this thing sort of trending down, okay, yeah, the technical chart also looks good. So all of these things sort of in our favor to the downside. So a possible rally is not a guarantee, of course, that it's going to be perfectly sold into and continue and you'll make a bunch of money. That's not what we're trying to get at. Trading is all probabilities, right? So if this setup does occur, this to me is a trade I would take, right? And this is the cool thing about when you trade with confluence from all three tiers, right? The technical analysis, which all traders talk about, right? That's like the common thing for retail traders. Fundamental analysis, which is what we just talked about, GDP numbers, inflation, and then sentiment analysis, when you look at institutional positioning and retail positioning, and you understand what the market participants are doing, which is a big one, right? You get a full picture and you can build more confidence in the trades that you're taking. Again, most people, they do this and that's it. They don't do this, they don't do this. They ignore the other two components to their trading, which the Edge Finder seeks to help you out with these. So again, I know I am, of course, going to pitch my software, which is our team's, sort of pride and joy. We've been working on this thing for over a year now. If you don't already have access to the Edge Finder, at least grab the free version, like I mentioned, down below in the description. And if you do want access to the full version, make sure to use the promo code that's down below in the description. We do have code YTVIP. It's the YouTube VIP. For those of you guys who are subscribers, punch that code in when you decide to get it, and you will get access to the Edge Finder for a discounted rate. So don't miss out on that. That opportunity. So I do like this. Like I said, on a rally, the pound USD also fits the criteria for possible sells. In fact, this one is beautiful, right? You get a nice downward trend and you get almost all factors, actually all factors pointing towards bearishness. So, and it's not like it just started doing this. This is a signal from, you know, the past 2 weeks. The pound has been really, really sell heavy. When I say sentiment though, let me show you guys something. So if we go take a look at the retail crowd and we look specifically at the pound, take a look at this. Pound USD, 70% of retail traders are long. And if we know retail traders are buying something, that's a red flag, because retail traders unfortunately tend to be on the wrong side of great trades. So we want to be in the minority in that case, right? Or at least that's how I like to look at retail sentiment. And again, this is not an all-seeing indicator. It's not a magical indicator, but it can be useful information when deciding to buy or sell something if you know what the retail crowd is doing. And maybe just as importantly, is knowing what institutional money is doing. Here's GBP, mostly short by institutional traders. Here's USD, mostly long by institutional traders. So you stack all these things. This is why we use the edge finder, right? We can look through that data and we can build a bias overall. So several charts here looking very, very interesting. And going back to our retail sentiment for a second, we've got to also look at AUDUSD, which is the extremity of the list at 88% of retail traders long AUDUSD. Let's go look what the chart looks like. And there it goes to the downside, right? And this is not coincidence. It's very frequently seen when looking at retail sentiment. If you're someone who studies that, you know, we look at that data every week, and sure enough, when retail traders are piled into a long trade, it often enough turns into a really beautiful downward trend, right? There's an inverse effect to some degree there. So we keep an eye on that when placing trades. Here's the 61.8% retracement. This is also on the list of interest, but this one's got a ways to go before any sell interest is there for me. Because you can see we had just sort of a fallout with the AUDUSD, right? And so if price is going to come back to a level of structure for me, which is what I use to enter trades, I'm waiting for that 61.8% retracement. From there, I'm looking to sell back to the lows, but even beyond, right? Trend following 101 is a real strong trend. We'll put in lower lows and lower highs, right? So we're looking for that lower high to potentially form. And if that occurs, we're looking for the continuation, the expansion of that trend to the downside. So I do like AUDUSD also to the downside there going into this week. So, and you can see it's a pretty recurring story. Most of retail traders are currently anti-dollar right now. They're long euro, long NZD, long AUD, long pound, shorting the dollar yen, shorting the dollar Swiss, and shorting the dollar CAD. I mean, it's 100%, right? Retail crowd is totally against the dollar move, and look what the dollar is doing. Dollar's flying high. Right? This is not coincidence. We talk about this so often in the channel, and we've been doing this for years. This is how we find trades, is we heat seek with the edge finder. We look for retail positioning, we look for smart money positioning, and then we use the economic numbers, build a bias, and take better trades that way. So that's going to wrap it up, guys. I'm pretty much, like I said, across the board looking for dollar setups this week. As you saw, I went through several charts here. Hopefully that was helpful to you. If you don't have access to the Edge Finder, remember, grab it down below in the description and join our Discord if you haven't already, also linked down below in the description, and hope to see some of you guys in there. Thanks very much for watching, and we'll see you back next time. Have a great week.